Hey everyone, welcome back to Corporate Decoder, where we decode the financial mysteries of the corporate world. Today we're looking at an 8K filing from micromobility.com. Incorporated, let's just say this filing is less about soaring profits and more about navigating some tricky financial waters. Before we dive in, if you love getting straight answers from complex financial documents, make sure you are subscribed. We also have a thriving Discord community linked in the description below, where we break down these filings even further. Alright, so what is the big news in this report? Well, it seems micromobility.com Incorporated has been busy making some significant financial agreements. The main event here is a settlement of a court judgment and then a new agreement for potentially raising a lot of cash. Let's start with the settlement. Back on the 30th of October 2024, a New York court ordered micromobility.com Incorporated to pay Bernheim Investment Fund, SICAV, a hefty sum of over $2.4 million. Now fast forward to October of 2025, they've managed to settle this judgment for a payment of 1.07 million euros. And the good news for them is that this judgment has officially been satisfied with the necessary paperwork filed in New York. This is a good sign because it means a major financial burden is off their shoulders and they no longer have outstanding judgments against them. Now for the really interesting part, they've entered into a standby equity purchase agreement with a company called Accession Limited or Yorkville. This agreement, dated the 20th of October 2025, allows micromobility.com Incorporated to sell shares of its common stock to Yorkville up to a total of $25 million. Think of it as a flexible credit line where they can draw down funds as needed by selling stock. This agreement is set to last for 3 years. The terms are quite specific. When micromobility.com Incorporated decides to sell shares, they can determine the number of shares, but there are some important limits. The purchase price of these shares will be 97% of the lowest daily volume weighted average price over 3 trading days. They also stated a minimum acceptable price when they request funds. A key restriction is that Yorkville cannot buy shares that would make its total ownership go above 4.99% of the company's stock. This is a common clause to avoid triggering certain reporting requirements or regulatory scrutiny. As a part of this deal, micromobility.com Incorporated has agreed to pay Yorkville a commitment fee of $500,000. This fee is for Yorkville's promise to be ready to buy the shares. Half of this fee is due 6 months after the agreement and the other half a year later. Here is where it gets complex. In connection with this agreement, Yorkville has already advanced the company $2.5 million. This $2.5 million is in the form of a promissory note. Of this amount, $1.3 million went into an escrow account and was primarily used to pay off that Bernheim settlement we talked about. The remaining $1.2 million was advanced in late October, after the settlement was concluded. Out of this $1.2 million portion, $155,000 will go to repay another promissory note issued earlier in April to Yorkville. Another $250,000 is designated as a payment for the implementation fee of this new October SAPA. The rest, about $795,000, will be used by the company for general working capital needs. This promissory note itself has some interesting conversion features. Yorkville can convert this note into shares of common stock. The price for these shares will be the lower of a fixed price of $0.006 per S-share, or 95% of the lowest daily average price over 10 trading days. However, this converted price cannot go below a certain floor price. This floor price will be adjusted after the company's stock is listed on a national exchange to be 20% of that initial listing price. There is also a provision that if there is a balance outstanding on the note, Yorkville can trigger an advance from micromobility.com Incorporated to buy shares, which would then offset what micromobility.com Incorporated owes them. This new agreement effectively replaces an older one. On the 21st of April 2025, they had a similar standby equity purchase agreement with Yorkville. However, they mutually agreed to terminate that April agreement on the 25th of August 2025. The good news here is that as part of this mutual termination, Yorkville waived any rights to fees they would have been entitled to under that old agreement. The creation of this promissory note is a direct financial obligation for micromobility.com Incorporated, which is why it is being highlighted in this filing. Now on to how these securities were sold. The promissory note issued to Yorkville was done through a private placement. This means it was sold directly to Yorkville without being offered to the general public. They are relying on an exemption in the Securities Act of 1933 that allows for these private sales without the need for registration in most cases. And just to reiterate, that Bernheim settlement has been fully paid and a formal satisfaction of money judgment has been filed, meaning no more outstanding judgments. The filing also lists the exhibits, which are essentially the actual documents for the promissory note and this new standby equity agreement. Now, looking at this filing broadly, micromobility.com Incorporated is in a situation where they needed cash urgently to settle a court judgment, and they found a way to do it. This standby equity agreement with Yorkville provides a significant potential funding source up to $25 million. However, it comes at a cost. They are selling shares at a discount to market price and paying fees. The conversion of the promissory note at a low fixed price or discounted average price also means significant dilution for existing shareholders. This is a classic move for companies that need capital but might not have easy access to traditional bank loans. They are essentially trading future ownership for immediate liquidity. The key question is whether they can use this capital effectively to grow the business, or if they will continue to rely on dilutive financing. The Bernheim settlement being resolved is a definite positive, but the reliance on this standby equity facility suggests continued financial pressure. The terms of the SEPA are designed to protect Yorkville and ensure they make a profit on their investment through discounted share purchases and conversion rights. The company's path forward will depend on their ability to generate revenue and improve their financial health to reduce their dependence on such financing. Alright, that is our breakdown of Micromobility.com Incorporated's latest filing. What is your take on these financial maneuvers, and what do they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.